Okay, the first thing we're going to talk about is the stock market. And the stock market is everybody's metric of how healthy things are. So let's just kind of start with the quick numbers. The S&P 500 is the key index for everybody. It is banging up against 5,500. I think it wants to go through. I don't think it's going to go through this week. We've got the debate tomorrow night. And we've got the Fed's preferred measure of inflation, PCE, coming on Friday. So it'll be very interesting to see what the close looks like on Friday. But the key ingredient here really is, let's talk about where things are. Right now, the Dow is up 4% on the year. That's below average. The S&P is up 15%. That's about the average over the last 10 or 15 years, really since the last financial crisis, 2010. So it's up at the average or a little bit above, and we're only halfway through the year. And the most important one, I think, now for everybody that's really kind of looking at stocks and trading stocks every day is the NASDAQ. The NASDAQ is banging up against 18,000 as a price point, and it's up, funny enough, 18% on the year. So what does that mean? Well, let's just kind of think about where we are here too. The Dow is selling at 21 times earnings, right? Which is expensive. The average is about 14. The S&P is trading at 24 times earnings, and that average is about 14 or 15 as well. The NASDAQ, which tends to be more of a growth stock story, people are willing to pay more for growth in earnings rather than value. The NASDAQ is trading at 38 times earnings. And of course, as you know, NVIDIA, which is everybody's favorite stock, is trading at 73 times earnings. That is a bet, part of investors, that NVIDIA's earnings will continue to grow at something like 50% a year for the next year or so. It may. It's a great company in the great sector of the market, which is the sweet spot, which is this AI revolution. And it's real. The money that's being spent on it is tremendous. The amount of money that it can bring into the economy is a little bit less clear, but I think everybody that you talk to recognizes that artificial intelligence, generative artificial intelligence, is highly likely to increase the productivity of the economy. And I think if you increase productivity, that means companies can reduce their costs. And if that's the case, earnings will continue to expand. Okay? So that's it for this section.